Okay, so live at 5, here we are in the happy hour, the ETF Think Tank happy hour. It's Thursday, January 19th. Thrilled to be here. I'm Dan Weisskopf, otherwise known as the ETF Professor, Portfolio Manager with Mike Venuto of the Blockchain ETF, and also lead ETF strategist for the ETF Think Tank. Thrilled to have this show today and thrilled to have Sui on here with Cynthia. You're up next, my dear.
I'm Cynthia Murphy, head of research for the ETF Think Tank. Always happy for Thursdays, 5 p.m. It's our favorite hour of the week. Mike, you want to go next and introduce our guest?
Sure. Mike Venuto here, co-founder of Title and the ETF Think Tank. Excited for today's show. I did a webinar with Sui about a month and a half ago with our friends at Hashdex. And immediately I said, I got to get this guy on, get Think Tanked, because I love what he's doing. He's doing with the world of crypto, a lot of the work we've had to do over the years with the world of ETFs. So there's a lot of intersection in the way we think about things. It's really hard to invest in things until you categorize them. And I think he's really built something pretty special. And I think we're going to get a lot of information. Logistics. So we like to have a drinking word, right, to celebrate. Today it's going to be framework. I love it. You're just going to love hearing Sui say the word framework. So I look forward to that. Also, if you want to come up and speak, either hit us in the Q&A. I'm going to start promoting people up. I'm going to put a link where you can get your own background. All that fun stuff. We like to have questions. If you do come up, stay muted till we unmute you. Use the hand function. Let's keep everything organized, all that fun stuff. And with that, let me introduce Sui and tell us a little bit about yourself and CF Benchmarks.
Thank you very much, Mike, and thank you, Dan. Thank you, Cynthia. Thank you to the Title team for having me on. It's I'm in London, so probably tell by the accent. So it's a little bit late for me. So I'm drinking for real every time I say the word framework. Oh, said it. So don't be surprised if I use that word a lot, as yeah, it's close to bedtime for me. But yes, as Mike so kindly and very flatteringly mentioned, my name is Sui Chung. I'm the chief executive of CF Benchmarks. CF Benchmarks is a UK FCA regulated benchmark administrator. And quite simply, I founded CF Benchmarks to do for crypto what MSCI has been doing for equities in the past 45 years. Everything, all the tools, all the frameworks, there we go again, that MSCI has so kindly given the investing community for equities and that investors and managers rely on every day. We intend to do that for the digital asset class.
So I guess I'll kick things off because I am the most crypto peasant here, way behind the curve on this. But just earlier this week, we were talking about just a phenomenal start of the year in crypto and blockchain. Actually was going really well until I went on a TV show and talked about it, and then it tanked. So I totally jinxed the space on Wednesday. I apologize. But then today it was all over Twitter, Jamie Dimon from JP Morgan calling Bitcoin a pet rock, basically. And so I was just curious, given all the work you're doing on standardizing the conversation and the classification and the understanding of the space, how do you react when somebody like him, with the kind of exposure he has, still takes the time to, I don't want to say be ignorant about it, but be really ignorant about it?
Well, it's not for mere mortals such as myself to question the musings of the gods of finance, such as Jamie Dimon. And if there is a pecking order out there, then Jamie is clearly Zeus of the financial world. So he's clearly entitled to his opinion, just as every investor is always entitled to their opinion. But what we've seen over the past 12 years since the creation of the Bitcoin market, obviously Bitcoin was created a little before then, but really the Bitcoin market, cryptocurrency market, digital asset market was really kicked off in 2011. what we've seen is investors vote with their feet and vote with their wallets. And yes, millions of people can indeed be wrong at the same time, but every passing day, every new investor, every new adopter makes the possibility of everyone being wrong that little bit smaller.
Yeah. So Sui, you and I had a prep call earlier, and I was, the challenges of doing what you're doing, I think, are underappreciated. So if you would take a step back, speak a little bit about your firm, and frankly, how you came to the crypto world as well. Maybe those are two questions, but I definitely want to speak about how established your firm is in the context of really a short period of time.
Sure. So, myself, I'm a capital markets data guy by training. I spent 16 years at Euromoney Institutional Investor PLC, and in that time ran a variety of businesses, including the equity and fixed income index business of Euromoney. And I came to a point in sort of 2016, 2017, where you could see that, and for anyone who's worked in the wholesale financial industry, I think it's pretty clear that the plumbing, the architecture, how it all works, how it is creaking at the seams, right? It's got to it can't really be iterated on much further and provide much more utility to the human race. I mean, it does its job, but there are various things it cannot do and does not do that people need it to do. And that's for a variety of reasons, and it's no one's fault. It's just, any paradigm comes to its natural conclusion at some point, and it reaches its limiting factors. I believe that the traditional financial world has pretty much got there, and that was my feeling in 2016, 2017, and I saw the birth of this new asset class, digital assets, cryptocurrency, and to me, it was clearly going to be an asset class, right? And it has its own idiosyncrasies, just like every asset class does. And it has its own challenges and its need for frameworks so that adoption can flourish. And so I embarked on with my partner, Timo Schläfer, to build out. At the time, it was a relatively narrow ambition, which was to come up with an institutionally adopted, agreed upon method for calculating a benchmark price for Bitcoin. Now that sounds well, in a sense daunting, but it also sounds pointless, right? Because one of the interesting things about the digital asset class is because of the fact it's traded in a distributed nature. So not only is the technology distributed in terms of distributed ledger blockchain, but the actual markets are distributed, i.e. there are, on any given moment, apparently 200 venues where Bitcoin is traded for other assets. And hence there's a million prices, there's thousands of prices every second. So you would kind of think, why do you need another price? But because it's a land of plenty. But in reality, if in that instance, you actually more need an agreed upon way to price and value crypto. Bitcoin at this stage, it was Bitcoin. And one of the institutions that was looking for such a price, a robust price, was the CME. CME was thinking about the possibility of launching Bitcoin futures, needed an index provider because they wanted it to be cash settled. The prospects for physical settlement were just far too daunting in terms of custody, in terms of key management, etc., etc. So I wanted an index provider, and I was naive enough and foolhardy enough to say, "Oh yeah, I can do that. Yeah, don't worry about that. Yeah, I'm your man." and so CF Benchmarks was born, and to this day we're still best known for people in both the digital asset space and the traditional space for being the guys that do the BRR, the Bitcoin reference rate, the CME/CF Bitcoin reference rate, which is the benchmark price that we publish every day that settles the CME futures contracts at expiry at the end of every month. And thanks to the hard work of my team, who are absolutely amazing, all the way from our development team, engineering team, product team, compliance and administration team, we have been fortunate enough to have settled $500 billion of Bitcoin, US dollar futures and options contracts without missing a beat. We have never had to unwind any settlements. We've never had to halt an expiry. It has run like clockwork, which incidentally sounds trivial, but let's not forget that not that long ago, the oil futures basically went into meltdown. Like, and that's an industry, there are thousands of people out there whose sole job is to work out what is the price of oil and make sure that it, delivery from A to B, bonded warehouses, bonded tankers, the oil is there, and that the contracts trade smoothly. And yet.
So Mike, before I let it go to you, basic question. You're talking about time. You're in London. I'm in New York. Cynthia's in Chicago. What's the time mark on when Bitcoin was up or down?
4 o'clock London time is the Bitcoin reference
everywhere?
rate.
Is that everywhere? Is that unified?
So the Bitcoin
it's really
reference
about
rate,
the futures, right? It's about settlement. It's the same with like
settlement.
gold or VIX and things like that.
So you need the most liquid point in the day. What is the most liquid point in the day? That's got to be the point in time at which you will apply your methodology to create that and observe transactions and create that benchmark price. Right here, right now, that is 4 p.m. London time. That is the most liquid period for the Bitcoin US dollar market. Now, the Bitcoin reference rate has grown somewhat in those intervening 6 years, and it now has a variance. So there is a New York variant. There is a 4 p.m. New York variant called, imaginatively, the Bitcoin reference rate New York variant, BRRNY. And we
TradFi
published
people are really, really creative.
Yeah. And BRRNY is published at 4 p.m. New York time to synchronize with the traditional market close in the States. And both of those benchmarks can be used. You can use BTIC order functionality on CME and basically trade at those prices. I want to be executed at those prices, and you obviously put a spread in. So those are really, now I'd say for the past probably 2 to 3 years, those have become clearly the two key liquidity points in the day.
Okay. All right, so I'm going to stick with Bitcoin for a little bit. I know we're going to get into more broad base because and talk about categories and all that soon. But all the stuff you just went through, it's funny. We have 2 products that touch this, right? We have our block product, BLOK, where CME was one of our largest positions because it's the way you short Bitcoin in a winter, right? And then on the other end, we have Samir here, who's partners with us with the Hashdex product, which settles CME product futures, right? In a 33 Act fund. So we love what you're doing because it's connecting DeFi with TradFi, but not the way FTX and all these other people did it, where they're frauds and all that. You're actually giving them the categories. You're giving nomenclature. You're not leveraging all that BS that we've had to deal with. My question's about the BS though, right? Like, we came out of the gate strong. Like I almost forgot what it meant for any of this stuff to go up, right? It's been 380 days or whatever. I'm going to ask you and Samir to answer this one. So you guys decide who wants to go first. But the disasters of Genesis and Celsius and FTX and Voyager and all of which were not crypto, all of which were not blockchain, all of which were traditional second oldest profession, which is fraud. Are we past that and it's worked its way out of the system and we can start to hope for enough regulation that we can actually invest here again? Like, what are you guys seeing at the heart of this industry? Yeah, I don't know. Maybe we'll let Samir go first and then we'll go to you, Sui, because that way we'll get the more voices in here.
Of course, Samir, please.
Hey, Sui, good to see you, Michael, Dan, Cynthia. So it's hard to know, right? Actually, like everything we saw, like in the last few months, it's been the result of two events. Is the macro environment that pressured down like risk assets and caused a deleveraging of the system, and then all of those things that weren't stable enough or that didn't have a solid ground or were based in fraud or either based in fraud or flawed risk management policies, it started to fail, right? And it started with Terra Luna, and then like things went down to Three Arrows Capital, Voyager, BlockFi, FTX. Now we're seeing Genesis, potentially DCG. So it's hard to know if there's any other entity that may go bust in the next few weeks or few months. We can say that we're almost in the end, almost like going through that. So I expect like the system is already very like deleveraged. So I think there is a big asymmetry here in terms of the potential upside versus the potential downside we can see in the short term. And so I think it's we're close to the end, but it's hard to say, like especially as we see Genesis, like what will come up of Genesis in the next few days. There are investigations ongoing, with crypto exchanges and concerns around Binance that can also be very problematic for the industry. But I will pass to Sui, and I remember a conversation we had, I think a few months ago when we were discussing this, and I think Sui made a great point about this is a market structure problem, not an asset class problem, and I think that's like the gist of it, and it has nothing to do with the investment thesis for crypto or for Bitcoin, right, Sui?
Yeah, no, thanks, Samir, and yeah, I think you capture it really well. And I might go a bit further, which is to say that there is no end, there is no beginning, because when you have in any industry, there are good, bad, indifferent actors. And if we look at traditional financial services all the way from the dawn of time to the present day, there have been failures of large financial institutions, large institutions, right? I'm old enough to remember BCCI. I'm old enough to remember Barings. I'm old enough to remember Drexel Burnham, obviously Lehman, MF Global. So regardless of the asset class that any financial institution operates in, there is always, number one, there is financial risk, and you have poor risk managers. That's just fact of life. And we've seen a number of in the crypto sphere, a number of institutions effectively fail due to poor risk management. Now, then you have outright fraud and malfeasance, of the BCCI variety, to a degree, Drexel Burnham variety, etc., and then all shades in between. Now, regardless of the asset class that any institution deals in, that is going to happen, right? That is a fact of life. Now, how do you mitigate against that? And how have we mitigated against that? How have we tried to improve things over the intervening, past couple hundred years? That's partly regulation, it's partly education, it's partly, slinging people in jail, right? rightly or wrongly, it works, right? You know, pour encourager les autres, as the French would say. You make an example of people, and over time that has gradually improved things. And it's true that, you know, in the since the last crisis, the types of firms that have failed and the number of failures have been, they've been relatively small firms that, you know, that it's business as usual stuff, right? We look at crypto, and yeah, we've had these failures for all those reasons. But as Samir said, those are the failures of institutions, intermediaries in the space. It is not a failure of digital assets in of themselves. So when Lehman went down, no one said, you know what, we should stop buying bonds and we should stop buying equities. No, you don't. Like, it's a bank, it's gone under. But that does not discredit the value of owning stocks, owning bonds, planning for your retirement, investing, and trying to make your money work for you. So analogously, in exactly the same way, I would say, yes, you have intermediaries and actors within the space that have demonstrated all kinds of failings, but that is not a reflection, and in one sense has nothing to do with the underlying asset class itself. You know, you judge an asset class on its merits, not by who is intermediating it.
You know, I wonder if the black eye feels so bad because crypto has such a retail footprint. So it isn't a story that's all the fraud and all the damage isn't really confined to like big institutions and they'll handle it. It's in everybody's mouth and at every dinner party. So it feels like the scale of it, maybe it's more than other things we've seen in the past. But what I wonder if, because of this retail presence, does that, I guess, punch to the credibility of the space, impacts its ability to recover faster? So, you know, are we going to struggle to see Bitcoin hit whatever 100,000, whatever milestones we're looking to, because now you have to rebuild this more from the ground up because of this retail space?
That's a really interesting point, Cynthia. And in my view, I don't think that's a very it's a very cogent point about the structure of the market. There is a lot of, I don't like to use the word retail, I would to private individual participation, because, you know, when you use the word retail, it conjures up images of, you know, casual investors, a couple of $1,000, a couple $100, etc. But the crypto space is quite different because you have, you know, participating in that market, those very, very high net worth individuals who are acting on principle on their own account, right? And that is, so that does make the market qualitatively a little different. But to your point of, you know, does that high degree of private individual participation mean that trust takes longer to rebuild? I'm not sure, because, you know, crypto built up a place in the consciousness of private individuals and investors in a very short space of time, right? So if it's able to do that on the way up, then I would sort of argue that it can continue to do that on the way down, right? Regardless of the direction of the market, you know, an asset class's ability to capture the public imagination, which is, you know, make no bones about it, that's what digital assets have done over the past 6 or 7 years, certainly. Then I don't think that really affects, you know, the time it takes. I think that obviously you have a lot of investors out there who are bruised and battered, and those that were seeking a sort of momentum trade. If you are someone who seeks a momentum trade, when the momentum is there, you'll just trade it. You really don't care what the underlying is, right? If you're a momentum trader, then when there's momentum, you'll trade it, whether it's Bitcoin, apples, oil, stocks, you'll just be there. So that's one cohort. And then the other cohort who, you know, participates in the market on the basis of fundamentals, of believing that here is a technology that could change large chunks of our lives potentially, and they believe that they want to invest in that potential. then they invest. Obviously, psychologically, again, we're talking about private individuals, when they lose 40, 50% of their initial investment, of course, they're not hurrying back in, right? They're not hurrying back in, but at the same time, they're probably not selling, right? And as the market recovers, they may seek to invest a little more, right? As they accumulate savings, just as people treat the equity market. I think that it's it's easy to forget that actually the equity market is pretty mysterious for many people on the street, right? And these Wall Street guys who wander about in pinstripe suits, they also don't have the greatest reputation, right? And they are not held in the highest esteem by many people on Main Street. And so I think with digital assets, it's kind of that whole dynamic just on steroids, right? It's happened quicker, its peaks are higher, its lows are lower. But fundamentally, the framework that it's operating in, there we go again, is the same.
So I just want to chime in, and then I'll tee it up with Lily and Samir. You know, in my experience, and you forgot long-term capital, Sui, as well, by the way. You know, the big headlines are a catalyst for a bottom. We've seen a lot of big headlines. Maybe we're going to see another big headline like tomorrow or next week for sure with Genesis, DCG, etc. And then that forms a bottom. So maybe I'm just in my heart optimistic that some bottom is occurring. That doesn't mean it's a V bottom. It is the point that I would make. So with that, I just tee it up to, I don't know who had their hand up first, Lily or Samir. Who wants to go first? Whoever pulls their hand down first goes.
Okay, I have a question. Can you hear me?
Loud and clear.
Okay. My question is, who are the auditors auditing all these crypto firms? Are there rules and procedures being developed, software, analytical tools at this point in place? Thank you.
So Lily, yes, I mean, one of the jobs of a benchmark provider like ourselves, regulated by the FCA here in the UK, is to have a framework for, very basically, okay, there's lots of data that's freely available, that purports to be transactions in Bitcoin and US dollars. How do we filter out the noise? What's real, what's not? There's a lot of research out there of fake volume, et cetera, et cetera. And so we have a framework in place. We have constituent exchange criteria. So to this day, although, as I mentioned, there are 200 plus trading venues that purport to be places where people trade Bitcoins for US dollars, CF Benchmarks only takes data from 6, right? So from 6 exchanges, they are Coinbase, Kraken, Bitstamp, Gemini, Itbit, and LMAX Digital, because they meet our criteria. And we apply that systematically without any exception. And so part of doing that, I have a pretty strong understanding of how much external scrutiny cryptocurrency exchanges come under. And one of the unfortunate things is that there is no requirement for cryptocurrency exchanges to be audited, even as companies, because obviously, a number of cryptocurrency exchanges are based in the US, right? There is no requirement for companies in the US to be audited. Only in the US, the only companies that are required to undergo a financial audit are listed companies. So that means even of the exchanges that I listed there, only Coinbase has published financial results that have been through an audit process. Now, they're the only ones who are required to do that, and they do that. Now, a number of those other exchanges have their operations audited, but not the overall financials of the company. Some of them actually have been audited because they intend to embark upon a listing process. They intend to go public, right? So you do that. Typically, when a company lists, as you probably know, it has 3 years of audited financial statements in the US. So some of those US-based firms who are on that path have done that, but there is no legal requirement for a financial audit for pretty much every other crypto exchange on planet Earth. And of course, when there is no requirements, you don't do it. So not only are there no sort of generally accepted standards of how you audit a cryptocurrency exchange, almost all of them are not audited at all.
Samir, you're up.
Yeah, no, just to complement Sui's answer, like hashtags, our funds have been audited by KPMG since 2018. On-chain audit, they check the balances and all the transfers from the fiscal year. So financial audit of a crypto exchange or any crypto business is completely possible. So if there is an exchange saying that it's too complicated to do a financial audit of I mean, it's not serious, right? It's all these things are this matter around proof of reserves will be seen in the crypto space, especially after FTX. They're just decoy. Like the fact is that you need a financial audit, right? And that's what basically we do as a crypto asset manager, and what we require from our counterparties, right? And that increases the level or the standard that we are using. Of course, like retail investors, they don't care about this. Like they go to wherever exchanges it's cheaper or offer the highest leverage, and that's the kind of like the problem we saw. And I think that connects with the Cynthia's question on if the recovery would be like slowed down because of all those frauds. And I actually think the opposite. I think that is a catalyst for demand. And I say that because like we talk with institutional investors all the time, and their major concern is regulation and crimes, right? And after everything we saw last year, and I really like the Swiss framework around how you handle those things. You need regulation, education, and jail time, right? All of this is going to happen in the coming months, right? So regulation, like the pressure on the regulators to define the standards has been increased, right? So we've been seeing like in Europe, there's like a crypto regulation that went out last year. In Brazil, like the law, like there's a crypto law now that was pushed, that was hurried the approval because of FTX. All the discussions that are happening in the US, they are also very promising. You see in education, now people are understanding the risks. They know that things can go wrong. They know what happens with, crypto lending market, for instance, and those kind of providers. And there will be some jail time for a lot of people, right? So there will be examples. So I think that out of this will come a better regulatory maturity. People will understand the bad actors will see that there are consequences. And the retail and the institutional investors, they will be educated about the risks. So I really think that this can be actually good for the next cycle of adoption of growth of Bitcoin. And if you look at the institutional service providers, like the providers that Hashdex interacts with, that are clients of Sui's solutions and services, they're doing the right things, right? Like Sui said, like Coinbase is audited, financial statement are audited. What's the problem with that? You need to get transparency, right? So I think that is already happening. So we have a lot of good actors in the space. Those actors are going to come out stronger in this cycle.
Yeah, pain is a great teacher.
Yeah.
Yeah.
That's why I pulled up the Bitcoin as obituary slides. It's been
Yeah,
declared
it's like
dead so
stronger
many
than the
times.
Highlander. It keeps coming back.
Yeah. All right, Weisskopf, you're up.
So I've been dying to bring this full circle. Talk about framework, right? Can we talk about the classification process that you built and how you went about doing that and how it breaks down? Because it ends up being kind of like alphabet soup, as you and I were talking. It doesn't make any sense to a lot of folks, but this makes sense to me.
Yeah, so thanks, Dan. So, wind the clock back, it's 2018, 2019 sort of time. We've got, our benchmark Bitcoin price, Bitcoin reference rate increasingly adopted, CME futures, there's more and more participation. And myself and the then 3 colleagues that I had, the team of 4 of us, were, okay, what do we do next, right? Done that, we've kind of done that, and it's not done, but we can see a path to how we bed that in. So what do we do next? And me being the crazy one who says, if we're here to be the MSCI of this asset class, then one of the things that digital assets, crypto desperately needs is a GIX. And obviously the other guys are predominantly tech guys, and they go, what's that? Yep. To the uninitiated, explain to them that GIX effectively defines what type of company every listed company in the world is. Right. You basically, as the CEO or the founder of a listed company, you don't get to decide what sector your company operates in. GIX decides what sector your company operates in as far as investors are concerned. And you really need that. You need, when you've got hundreds and, then it was hundreds, now it's thousands of tokens, a complete alphabet soup. You need a way to classify each and every token and coin in a manner that is going to be understandable to investors, right? People who aren't doing this day in, day out, that are not spending their entire lives thinking about it. And so we embarked upon this project, and there was lots of ways you could do it. You could think about, you could have coins versus tokens, whether they're native to a blockchain, governance tokens that give voting rights. You think about the rights they accrue, et cetera, et cetera, et cetera. And very quickly, whenever you went down one of those roads, you would end up with the same problem, which is you need to know a lot about blockchain and crypto to understand what that means, right? And so we decided to take a further step back, right, and think about, okay, when someone thinks about Ford stock, right, when they think about Ford stock, they're really thinking what they've got in their minds is Dearborn, Michigan, a huge factory where cars are being made, right? And that's what they're buying into. And they're buying into the fact that Ford will make more cars, more people will buy them, they'll see more Fords on the road, et cetera, et cetera. That's effectively the investment thesis. For any stock, it is, there's this company out there that provides a product or service, and I believe that more and more people will consume that product or service. Hence, I'm going to buy the stock. And so if we take that approach, so we thought, okay, how does this map into the digital asset space? And so we forgot about the tokens completely. It's like, forget the tokens. What's the factory, right? If Ford has a factory, makes cars, forget about its corporate headquarters and all the rest of it and bean counters and CEOs. At the bottom end of the day, they make cars and people buy them. So there's a factory somewhere making cars. So what is the analog to said factory, right, for a digital asset? Does it even exist? And it does. It does. People ask me all the time, but what is this stuff? What is its value based on? And I tell them that every token is associated with a software protocol. And that software protocol, as we can see on this diagram, if we look at the inner part of this diagram, all of these protocols are one of 3 things, right? The protocols that are tied to any given token or coin are either settlement networks, right, i.e. blockchain networks that provide settlement finality, i.e. it moves value around. And that value is the coin that's native to that blockchain network. They're either that, and prominent examples, your Bitcoin, your Ethereums are that. They are settlement networks. And then you have what you see in the orange in the center, what we term services protocols. They provide services that allow protocols on the blockchain to interact with each other. Right? And these can be, people talk about oracles. That's one type of service network, whereby oracles predominantly, yes, you and I can tap into an oracle and find out information. But generally speaking, 99% of the time, oracles are there to facilitate information flow between protocols. So they're kind of like B2B, what we would term B2B in the traditional economy, B2B services. And then finally, we have in the sector space, dApps, right? Decentralized applications that provide products and services to end users, right? Probably the most prominent ones are the culture, where NFTs and metaverse applications have been developed, and they have a token, right? And you've got DeFi, the financial side, where you have services such as Uniswap and Aave. They have a token tied to them, and they provide financial services to end users, right? Be that trading, be that borrowing and lending, but these are classic economic functions. And when we think about it in that way, so we thought about it in that way, it's like, forget the token, think about the factory, right? What is the factory? What does the software protocol tied to this particular token do? Does it provide a service to end users that is akin to, that provides a product or service to end users? Does it facilitate these protocols interacting with other protocols? Or is it the base settlement layer that is the base platform for the ecosystem? Because we think about it as it's a blockchain economy, right? There is an economic system that resides on the blockchain. And once you start thinking about it like that, it starts to fall into place, and you start to be able to view the value chains that are there. So, someone on this pod right now, on this call right now, has probably used Uniswap before to swap one token that they have for another asset. But were they aware that, so the first thing is, when you pay your fees, you obviously pay your trading fees, you use Uniswap, that goes into the treasury. And what happens to the funds in the treasury, and there's about, I think, close to $1 billion in that treasury today, Uniswap, what will happen to that treasury is controlled by holders of the Uniswap token, right? So at some point, someone may suggest maybe we should take all of the treasury and use it to perform an open market operation to acquire, Uniswap tokens, akin to a buyback in a traditional corporation. So you have that. You have now for Uniswap to function and actually provide that service of swapping one asset for another, it calls upon oracles, because it needs pricing information. It needs to know, what is the prevailing price on centralized exchanges like Coinbase, etc. Right? And when it does that, it pays a fee. Just in the same way as when Goldman Sachs uses a Bloomberg terminal, it pays Bloomberg. Right? And what does Bloomberg provide? It provides information so that Goldman Sachs operations can happen, can be facilitated. So similarly, when Uniswap needs information, it calls an Oracle network, probably Chainlink, pays for the use of that data to be able to facilitate transactions for its users. And then very finally, when it's time to actually settle, actually move people's assets from wallet A to wallet B, it does it on the Ethereum network. So in exactly the same way as Goldman Sachs requires SWIFT, the banking network, AT&T, right, to move, transmit the information. So Uniswap relies on the Ethereum network to do that. And that's what the Ethereum network is. That's what a settlement network is. It is SWIFT plus AT&T. But guess what? It's also programmable, and it doesn't have staff. It does not have, generally speaking, it does not have operational staff. It does not need to pay individuals to turn up to a huge office tower to do this for 8 hours a day. It does it 24/7 automatically through smart contract technology. So that is the value chain. And if there is an investor out there who has heard of this thing called DeFi and this thing called smart contracts and believes it to be potentially revolutionary, then what our job is to provide a framework for them to be able to quickly discern, okay, who is going to benefit if that happens? If millions of people, billions of people start using smart contracts, where is the value going to accrue? It's going to accrue in these places, in these tokens. And that's, in a rather long nutshell, what we have done.
I love this because we have to do it with ETFs, right? And you would think, man, it's been 30 years. Why isn't this done with ETFs? And the answer is, it's not centralized. Like, and there's no reason that one group is going to win out over the other. I really like the way you did it, because when you were saying, this one fits here, I took a guess and I actually got most of them right. So I feel good about it. We're going to go to Tiago. He's got a question. I think he's used Uniswap once or twice, I'm guessing. Yeah, Tiago.
It's great. I think it's amazing. So I just want a quick question about, I love that classification that you have on your website. I think it's awesome. One thing I was thinking about the other day is clearly a lot of those tokens are created sort of as memes. Something happens in the world, there's a new coin being created, like the Doge coins of the world, and it kind of got popularity because of other factors. But I was just thinking, do you think some of those need to just go away for the company, for the entire blockchain industry to start being taken more seriously by some other folks?
Hold on. Before he answers this, I want to get in on it. So you finish your question, and then
I just want to say, people ask me sometimes, my mom was like, did you buy this Dogecoin thing? I was like, I wish, like back in the day, not now. But they just treat it as a kind of a joke. But if they go away and only like the ones that are actually doing something, a lot of the good stuff stay, wouldn't that like take the cryptocurrency industry to the moon faster? I think that's the question. So,
all right, so I'm going first on this, and then I'll bring you in. Look, who cares if it's a meme? People are transacting on it. It's a brand and a meme. I actually am angry with Bitwise for leaving it out of their index because they say, oh, it's a joke. It's not a joke. It's a joke that actually people like. It's a brand. Reason I like to say this, though, is it's the same damn thing as QQQ. QQQ, all these people investing in it, it's not an investment thesis. It's a brand, right? The NASDAQ folks are our friends, but it's not an investment thesis. The 100 largest companies, excluding financials, that are listed on this exchange, it's a brand. QQQ's investment thesis is the same as Dogecoin. Like, so I take a little offense to it.
Big statement.
I'll say it to Sean, our friends at NASDAQ.
The phones are going to start ringing around here now.
Terry's going to call me later tonight and be like, what the fuck are you talking about? Like, but it's brand has value. Attaching brand to settlement, I get it. So I'm going to go back to the right background, but I'll send it over to Sui. That's my opinion on it. I know it's an unpopular opinion that QQQ is not an investment thesis. Either is Dow Jones. It's really to promote the Dow Jones index and the brand. There's a few major ETFs out there that are just memes. So go ahead, Sui.
Yeah, no, I think that Dan makes some salient points. I mean, Tiago, I understand sort of where you're coming from, but at the same time, as an index provider, my job is to, and a lot of the time for, people in the sort of portfolio theory end of quantitative analysis end of the investment industry is to observe what's there. Right. My job is to observe what's there, not to dictate to it. To observe what's there and put a framework on it. And So that's one. And two, you can't, you are in danger of throwing the baby out with the bathwater. Let me give you an example. Shiba Inu, right, which began as a joke on a joke, right? That's like the CDO of jokes, right? CMO. It's a CMO, right? It was a meme of a meme. But we fast forward a couple of years, and you see that Shiba Inu has spawned Shib Infinity, a game that has had a couple 100,000 downloads, right? Where Shib is the currency of the game. You see it's spawned Shibarium, a layer 2 protocol, a service protocol, a scaling solution. You see, these jokes can get serious, right? And you wouldn't, although you don't want to base an entire asset class on that particular journey, at the same time, you do not necessarily want to sort of discount the notion that that can happen, right? And many a commercial enterprise over the years historically was started as a joke, as something fun, and becomes $1 billion enterprise. Enterprises change, right? If we go back, 3M, the cornerstone of Midwestern, the Midwestern industry, one of the cornerstones of Midwestern industry in the US, started out life as two ventures. They had a mine, and it made grinding wheels. Obviously, over time, successive management teams have diversified it away into other areas. And I think that although crypto projects are not companies, they're obviously not companies, not enterprises in the classic sense, but they do have they are basically the collective brain power and coding power of a group of developers. And that group of developers changes over time. And different projects can attract different developers, and they can create new, powerful, and potentially software and tokenomics and use cases that have very, very high impact. And I don't think you would necessarily want to sort of exclude that from being part of the ecosystem. That's just my 2 pence worth.
So Sui, let me just interject. And Tiago is in charge of our cybersecurity and technology, just from a disclosure standpoint. So he really knows what he's talking about. All of this ends up with 2 factors that are important. And I agree with what Mike was saying. One, it ends up being about utility and whether groups follow it and believe in it. And that's a momentum question, right? I would guess, that if a quote project or token actually doesn't work, but is glorified, it'll go to zero eventually. It's just a question of when. I mean, so isn't the capital market formation of these things ultimately going to decide what wins and loses?
I think eventually, yes. Although we are, the space is in its infancy, the asset class is in its infancy, and there is, because of that, private individual, well, it's not just private individuals, any market with high heterogeneous participation is going to have a lot of FOMO, right? And that FOMO piece is acts as almost like a trampoline, right? That it puts a floor onto the existence. They never quite go out of existence, and so that is a dynamic of the market that's still there. I think I agree with you. Over time, it will disappear, but right here, right now, I don't think it's constructive to pretend it's not there. Right.
So, Samir, you want to?
Yeah,
What was the question?
we're gonna let you do the last one. I do want to thank Sui. I put his website in the chat. We really appreciate all your time. We're gonna end with Samir's questions or comments. And next week we have Aaron Everlude on. Is that right, Dan? Did I pronounce her name? Arverland. Okay.
Yeah, and just for those who don't know who she is, she broke the story in Barron's on, gosh, now it's just like slipping what's the guy's name, Mike?
Madoff.
Oh, that's right,
Yeah.
Madoff.
Yeah.
And is
not
also
not SBF, but Madoff.
Yeah.
But it's basically the same shit.
and is also on the Netflix show documentary that just came out. So
Okay,
it's good
great.
fun, too.
So thank you, everybody. We're gonna give Samir the last word. So fire away, my friend.
Okay, now just real quick on the meme coins things. I think it's very important to recognize that meme is a digital culture phenomena, right? It's not something that was created by crypto. It's something that really just happens in the digital space. You have meme stocks, right? So you can speculate on nice tickers. You can speculate on companies. The Wall Street bet companies. Like you can manipulate the market based on memes. Tesla, like all those things we've seen. And what is different about crypto is that anyone can create a new token. Like imagine if anyone could just create a new stock and list it on NASDAQ, on NYSE, and anyone could trade, right? You can basically transform into a financial asset, any meme into a financial asset. And then you can create a speculation on top of that. What is the investment thesis for this? What is the value? I don't know. I don't trade that. I don't think there is an investment case for that. But guess what? Every time someone creates a new meme coin, it is passing a transaction on a smart contract network, on Ethereum, on Binance Smart Chain, Avalanche, Solana, whatever. So every time someone is creating a meme coin, it is creating economic value for the smart contract platform. So on the smart contract platform, I think there is an investment thesis there. I think meme coins are here to stay. They're not going away. People are going to speculate. Like every time there's a new event, someone just creates a new meme coin, and then the token would go 1,000% up just on the speculation. Just you just linking to meme events. That's speculation. That is like human nature. That will continue, right? There's no investment thesis on meme coins. I wouldn't invest in meme coins, not my thing. Someone may like this, but every time someone is using a meme coin, they're using a smart contract platform, and that I think there is an investment thesis for that.
Love it. My perspective on it has always been buy and learn. I've said it on these shows for years. The education you can get by buying one of these things for $100 and figuring out how to actually do a Uniswap, or everybody knows my story. I bought Dogecoin in 2017, and then I forgot about it till I'm taking a hike one day and Elon's tweeting about it. But learning how to get my money out of there, that was worth more than, no, it wasn't worth more than the amount of money I took out, but it was all good. We love you all. Thank you, Sui. Thank you, Samir. Thank you, my think tank team. We'll see you next week.
Ciao, everybody.
Thanks very much.